Good morning, sir.
Good morning. How you going?
I'm good, man. Good day. Beautiful day.
Today's the 12th of August.
Yeah.
We're here again. It's 11 a.m.
Nice and sunny in Sydney.
It is. It is at the moment.
Sunny on one side, dark on the other.
What's been happening on your end?
Not much, man. Just the same old, cruising along. Gym's still going all right. Nothing to be concerned about at the moment. Mm-hmm. But I think times are going to change very quickly.
Well, we can see it on the news.
Yeah.
You know, I saw this morning they reckon the house prices are going to fall about 15%. You know, it could be a bit of an exaggeration. However, things are definitely slowing down.
Yeah. Well, as you were just talking about before, you went to Melbourne.
Yes, so this week I went to Melbourne on the weekend just to check out the property market. You know, it's similar to like in the movie The Big Short. You want to go check out what's going on before you look at buying anything, and obviously what the feeling is out there. And it was pretty bad, to be honest. I did about 15, 16, 17 opens, and out of those opens I only saw about 1 or 2 couples.
Same couples across the 17? Or
No.
You only just saw 1 or 2
across the whole 17.
The whole, yeah.
So
and no buyers?
No buyers.
Wow, 17 auctions.
No, 17 open homes.
Open homes.
Open homes.
Yeah. And only 2 couples in each one.
No, 2 couples out of the whole 17.
Oh, the whole 17?
Yeah.
Oh, shit.
Yes. I was rocking up to open homes and there was nobody there. Literally.
I thought you meant 2 people at each one. I was like, that's not too bad. But 2 people.
2 couples.
The whole 17.
And the whole 17.
Damn.
So, and obviously these nicer homes as well.
Yeah.
You know, they were the newer type of homes, maybe 40 minutes away, Melbourne City. Beautiful properties.
Good investment.
I thought.
Yeah.
You know, those same houses here probably go for 1.2, 1.3 million in northwest Sydney.
Shit.
But yeah, like when I saw that, I was like...
It made you realise the reality of what's going on. It's funny you say The Big Short. I watched that last night. What a movie.
Such a cracking movie.
Oh man, it's one of the best. You definitely have to watch it because it teaches you so much.
Of course, Margot Robbie's in it as well.
Yeah.
She comes on a couple of times. But it's a cracking movie, and that's exactly
what's happening right now, hey?
I think it is.
Yeah.
Honestly, I do think it is. I think it is.
It's scary stuff.
However, we have a lot more debt than we had back then. So back in 2008, when the GFC happened, the banks got bailed out to the tune of $700 billion.
That's right.
Dollars, right?
Yeah.
Back then, $700 billion was massive.
Yeah.
Right? Now we're talking about trillions and trillions of dollars.
Yeah.
So it's going to be 10 times bigger, whatever happens.
That's crazy because in the JFC, in America alone, 8 million lost jobs.
Yes.
6 million lost homes. Mm-hmm. And that was just around the mortgage bonds, wasn't it?
Back in 2008?
Back in 2008.
Yep.
So that was kind of just one macro event which had shockwaves through the stock market.
Yeah, and
so on.
Yep.
But when we're looking now at 2026, we're seeing the real estate market hit similar issues. Then we have an oil crisis with 2, potentially 3 global conflicts with Taiwan and China. Then we have the AI bubble, and then we have the yen carry trade. So we have 4 or 5 macro events, dominoes, that are all simultaneously falling at one time.
It does seem they're all converging.
Yeah.
You know, the biggest problem with 2008 was the debt from the mortgage real estate bubble in America. They realised that debt was then sold to other banks, who then sold it to other banks, who then sold it to international banks. And it was a big domino effect, right?
They just started printing money, hey?
So then, when the GFC happened, what happened is everything ceased. So the banks, what caused the biggest issue was a few banks fell over. They wrote off those loans, dramas were happening. But then banks were getting scared to lend to each other. So what happens, especially in business, they also require a lot of short-term money. You know, because you have cash flow issues, you have, you got to pay payroll, sometimes you haven't got the cash, so you go to the bank to give you that bit of flexibility over those days. Now all of a sudden the banks were freezing, saying, I'm not going to lend money to you, you're not going to lend money to me, and everything froze. That's when the government had to step in, the US government, and they basically printed to the tune of a few different tranches of money to basically flood the system to make basically drop interest rates, and then the banks started lending to each other again.
So I think looking at this now, we're kind of moving towards the same direction. where we've seen interest rates progressively go up, stay on hold, where the Fed in America has recently held, but I think they're going to have no choice but to ease
Well, that's what
and
happened.
print money.
That's what happened in 2007. Rates were still going up,
Yeah,
right? It kept going up.
And then-
the economy was doing well.
yeah, which is exactly what's happening now.
It sounds like it very now.
And the stock market's pumping at all-time highs like it was then.
Exactly.
Right.
Exactly. And then something just broke it.
Something broke it.
You know, it's going to be the smallest thing.
Well, I think it's going to be the yen carry trade.
It could be. Look, I think the yen.
Or oil. It'll be oil.
It could be oil.
Because oil's, by and large, the biggest sort of catalyst, isn't it?
The same thing happened in 2008.
Yeah.
Commodities were going up.
Yep.
As well. So
Well, they had the Iraq war back then, didn't they?
they did.
Yeah.
Back at that time. So
There's a lot of similarities.
they always say that you know, history doesn't repeat. It
Repeat rhymes, yeah.
You know, so
Wow.
and you just see it. You know, you can see like things are starting to slow down here, especially. I know the government here has done a lot of changes to property, and I've always said this
Massive changes.
had to be done.
Yeah.
Had to be done. House prices were going too fast, too quick.
But now they've done the sledgehammer approach, and it's completely stopped everything.
Well, they've hit negative gearing. They've hit capital gains tax.
Yeah.
They're looking to hit trusts as well.
Yeah.
You know, then all of a sudden they hit SMSF resi lending as well. Bang, 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 bang.
All three.
The market doesn't know what to do.
Yeah. So
And-
yeah.
And that's why I actually went on the weekend to try and get in
Nice.
before the SMSF resi changes, which came in on Sunday night. I, to be honest, didn't make it. There wasn't anything there that I really liked. But when I was sitting at the airport, I was thinking, these numbers don't stack up now. Because now negative gearing has disappeared. So any loss that you were getting from your property, you put into your personal tax return, you get a tax refund.
Fuck.
You get back 30, 40% or 50% depending on your taxable income. Now that's gone. So all of a sudden, you got investors going to the market realizing, firstly, fuck, I can't borrow as much because I can't use the tax refunds to bulk up my serviceability, so I can spend less. You have real estate agents who are not willing to drop the price at the moment, and now you've got like a stalemate. So you just got people just waiting.
Stagflation.
Well, I don't know if it's stagflation, but you've got vendors not willing to put the price down yet. You've got investors and first home buyers who can't borrow any more money from the bank because rates are high.
Yeah.
They can't get the benefits from the government in terms of negative gearing, so they can spend less. So now you've got a standoff, and that's what's happening in the market. Victoria,
Bro.
New South Wales,
And like
South Australia.
all that needs to happen now, in my opinion, for everything to just fucking shit hit the fan is oil. And the problem right now is that there is no deal.
no deal.
There is not going to be a deal because I know for a fact that Iran have come out and said we are not dealing with Trump anymore.
I saw that as
They
well.
literally said 2 days ago that they are going to wait for his presidency to end
Yep.
in 2029. That's ages away, right? And they have passed over all powers to the IRGC because before they had sort of two different parties making decisions. One was a bit more democratic. Now it's just the IRGC.
Yep.
And they literally gave the order this morning, and you can look at this all online, to attack American vessels.
Yeah.
Whereas before it's always been defend the country and only attack when attacked. But now it's like we're going to attack. And they've started cyber attacking the US.
I saw there was starting to hit the water facilities,
Yep.
electricity, and that's a sign.
Next will be banks.
But yeah, well, banks are the big one.
Yeah. If they hit banks, yeah, fuck. Big trouble.
Big trouble.
Then you've also got the war in Ukraine and Russia, as we've been saying for weeks, is really escalating. And it's getting into German territory, Belarusian territory, Latvia. Like all these countries are starting to see like drones and things like that.
Yeah. Yeah.
So we can see that these wars are not de-escalating at all, which is going to put a lot of pressure on energy.
For sure. Well, you can still see fuel here is $2 for unleaded. You know, and you'd think the price of oil has dropped over the last few weeks, but we're still paying $2.50 a litre or $2 a litre, $2.50 a litre for diesel.
Yeah, and as we said before, like it's just about uncertainty. The market prices in that uncertainty, and that's what wars do.
Well, that's why the RBA yesterday did not move.
They didn't move, yeah.
They didn't move.
And they said more likely going to see a rate rise towards the end of the year.
Well, I like how she came out and said there was no discussion. We had discussions of increasing keeping it the same, but there were no discussions, so don't ask me about cutting anything.
Yeah, no. It's out of the question.
It's out of the question.
Yeah, inflation's too high.
It's too high. And the whole fuel thing, I think, was the reason why they stopped it.
Yeah.
You know, because otherwise, yesterday, it should have happened.
So do you reckon the fuel excise is the only thing that stopped it from going up?
I think the increase in the fuel excise has sort of acted like an interest rate rise, like a quasi interest rate rise anyway.
Yeah.
Because now all of a sudden, if you're spending $2 a litre instead of $1.50,
it's the same as your mortgage going up.
Same as the mortgage going up.
Yep.
And if anything, it's probably going to hurt you more.
Well, it only fucking builds up, doesn't it?
Yep.
Yeah. And you got to deal with it more into Christmas.
That's why I was surprised that they didn't just do it, because
You're better off.
it's better if you do it now.
Hard and fast.
At least people can deal with it, and then get to Christmas and have be happy and just spend.
Yeah.
If you do it right before Christmas and do it in November, it's like you're going to be less inclined to spend, because you're like, fuck, I can't afford it now. I'm going to hold.
Maybe it's a good year to tell your kids Santa's not real.
Santa ain't coming.
Only joking. Don't do that. Yeah, far out. It's funny because watching that movie last night out of coincidence, it really resonated with like how serious this could become and how much you have to really prepare. Hey,
look, it's happening, and I think this morning, I think it was ANZ. They reckon 15% property price decrease.
Yeah.
Right, which is a lot of money in anyone's book. But the way you got to look at it is, they call it the wealth effect. If your property has gone down 15%, or you perceive it to, you're going to spend less because you feel less rich. And if you feel less rich, then you're going to put less money in the economy, right? So then it starts to cause this negativity bias, you could call it, right? Where everything you see is negative. You start going down, down, down a spiral. So if you spend less, you're going to buy less. So if you're going to do that, it's going to have a negative impact on the economy.
100%.
And that's why they didn't raise.
Yeah. And September's going to be a really interesting month as well, because the Clarity Act didn't get passed. So for those of you who've been following with the XRP situation and altcoins and things like that, they have. And this is the perfect way to manipulate prices, because this is how they test your conviction, right? Like, they delay things, and they have with this Clarity stuff and the SEC regulations. They've been doing it for years, right? They've been passing them slowly, but little bit by little bit, so that people just get deflated and unmotivated, and they're just like, fuck it. And especially now, moving into this economy, if someone's holding 50,000 coins or whatever it might be, that might be their last bag of money. When their house prices start falling, when petrol starts getting expensive, they've invested this money into a coin that they think's going to do amazing things, but then all of a sudden they've got to sell. Right? And this is what they do. They did this last time, right? So they get them, they manipulate prices down by buying and selling and whatever. All these other catalysts happen. People are forced, the everyday, Joe Blow.
The retail guy. The
retail guy is forced into liquidating because they need cash to survive. And then they scoop up the coins. So for me, looking at the market, this is exciting. Like, I'm seeing red in the crypto space, and I'm not going to lie, I'm fucking buying. Because this is where, serious cash can be made. So what I was saying before is September's a really interesting month, because they haven't passed Clarity, but they have decided a date for its final vote, which is the 15th of September. Now, in that same week, you have the Federal Reserve interest rate decision, and you have the Bank of Japan interest rate decision, all in the same week. So definitely a date to watch, because if the Federal Reserve ease interest rates, flood the market with money, the yen increase, you'll see the sell out of the yen carry trade, and then people start selling out of their positions.
They go to crypto.
If Clarity passes, it'll pump before Clarity, then you get retail buy into the higher prices, and they wash the same fucking pattern over and over and over again.
That's the game.
So that's what I'm watching for, and this is what I've been watching for ages, and it's playing out. It's been, a lot longer than I thought it would, but it is playing out.
Well, I saw it last week. I don't know if you saw that. He's an investor called Leopard, I think, and he made like 46 billion in the space of a few months, and then they basically wiped him out last week.
They wiped him out, yeah.
The New York Wall Street, essentially.
Yeah.
The big hedge funds.
Yeah.
Basically, they levered him up, gave him more money to go buy more stocks, and I think it was something ridiculous, like 4x or 5x the value of the position. They basically gave him more money to go buy stocks, which they made money on, selling the stocks, buying. They gave him the margin. Eventually, the rumours are that they put a fake narrative out there saying that the Fed may increase rates.
Fuck.
So as soon as they did that, risk went off.
Yeah.
People started selling.
Yeah.
And this happened over the space of a few weeks. And then basically he got fully liquidated. And then they bought all the positions that he had.
That's why this whole thing is an illusion.
It's insane.
It is a fucking illusion. And then when you see through the illusion, you start thinking and moving like the big guys do. And you stop buying the narrative.
And that's what happened. Man, this guy got taken out.
Taken out because he couldn't see it clearly.
So he may still be right in the long run.
In the long run, but it's too late now.
It's too late.
Yeah, because he positioned himself in the wrong time.
And it's not just him, it's all the people that invested.
Heaps of people.
You know, they invested in
Retail
him.
thinkers, yeah.
Retail, because they're like, it's going to go up, you know, I'm going to 10x or whatever.
If it's too easy, it's too easy.
If it's too, exactly.
If it's too easy, it's too fucking easy. If someone says, don't do.
I've always
Except
said,
maybe me.
whenever, if you're watching it on TV, it's too late.
Yeah, on TV, that's a good way of putting it. In the media.
It's too late.
Yeah, it's too late.
And you can see it all the time. You hear it on the radio, like, oh, you know, this junior miner, they're about to hit gold.
That's what they do.
Whatever,
Yeah.
right? When someone's talking about something like that,
It's bullshit.
it's too late.
It's bullshit.
Because you think
It's
about
like SpaceX. SpaceX was the best example.
it's skyrocketed.
Oh, of course it did.
You know, but it come back down. I still think that, you know, there is a trade in there
100% over time.
over time, because I didn't realize that SpaceX also includes Starlink. It also includes
Tesla?
XAI.
No, not Tesla. Tesla's got its own,
XAI plus the rocket business.
Yeah.
So because I thought they weren't making much money, but they're still doing like 8 billion a quarter or something ridiculous, right? Like that.
Yeah.
So, like even with that, you can see it is, man, it went from 150 to like 250.
Yeah.
And went back down. I think I saw it the other day at 110. Imagine if you bought at 250, you're already down 50%.
Smashed.
But that's the hype. So you gotta sometimes decipher the noise, not see it, and see it.
Buy the fear. Buy the fear. Buy the fear. And that's why I'm excited at the moment with the crypto space, because there's so much fear.
There's
so much fear.
There's fear in the crypto space. There's fear in the property market.
Yep.
Like the property market, like I speak to so many.
There's such a big buying opportunity in the property space soon.
There is. I still think it's got a bit to go.
100%. I agree. Yeah, I think wait a good 6-12 months. Yeah.
I also reckon that like Arbo's definitely taken the flak for it.
Yeah.
Because
he's a scapegoat.
But I do think, you know, if it gets to the point, if they don't do anything and it gets to the next election, then they cannot put him as the face. That's where the party will change and they put someone else. That's what I think will happen. Because if there are big drastic changes, again, definitely should have.
How many times have we seen this in our lifetime? I'm only 35 years old. You know, and I've realised that this has happened more than once in my lifetime. But you can only imagine, like, back over the last 100 years, how many times has this happened? And it continues to happen.
Yeah, look, it continues to happen. It's money making.
It's money making.
It's money making. And like I said, you make money on the way. You can make money on the way up, and you can make money on the way down.
That's the thing. You don't have to work hard anymore.
No.
Like you do to a certain point.
To get the money.
To get the money to start with. Yeah. But, man, honestly, like one of the best things is I've slowed myself down from working so hard, sat back and been okay with living a medium life and just watched the world and how it works and how it operates. And everything's a pattern. Psychology is a pattern. Like people think in loops. Patterns work in loops. Markets work in loops.
Yes.
Wars, loops. Everything is a fucking loop. Learn to read the loop and you can learn to make your position and make it work for you.
Well, that's essentially what trading is, right?
Yeah.
If you can pick a position, you know, whether it's in stocks, crypto, property, whatever.
Yep.
If you can see based on fundamentals or based
support levels, resistance levels, all those things.
If you want to go to that level with technical detail, you can.
Yeah. But it's not that hard anymore. Like so, even this morning, right? I've got Claude now, paying for Claude. Not a paid ad, but I'm in Claude, right? Because it's so much better than Gemini and Chat. And like I've just said, teach me all the things about key levels and supports and resistance and all that stuff. And if I've got $5,000 to spend, help me allocate some cash in trenches and whatever. And man, You sit down with Claude for an hour, 2 hours.
Yep.
You've just become, it's like the Matrix, you know, where they plug the fucking Kung Fu into Neo's neck and he learns Kung Fu. Bro, Claude is literally that system.
So Claude can also take it to one next level.
Yeah.
I'm not telling anyone to do this. You can connect Claude into TradingView.
Correct, yeah.
Which is a famous charting stock app.
Yep.
Then you can connect into your CMC markets.
Yep.
As well, so you can take it to that level.
And it can analyze all the...
It can do the trades for you.
Yeah, it can do it for you. So I've seen people do it.
Yeah, I've seen it many times.
Yeah.
You know, you can actually, based on whatever you do in TradingView,
yeah,
you can actually get it to do trades on your behalf.
I reckon that's, people are making money off it and good on them. But I would prefer, for me, learning it, understanding it, doing it myself. Like, that's way more fun.
It is more fun.
Yeah.
You know, but when you realize with all of these markets, it's all about sentiment.
Yeah, it is.
You know, it's like, that's why when Trump does a post, the markets just peak or they go down or whatever, because
it's illusion.
It's all like, you think about he does a post, you got all these algorithms watching him, and Twitter, and
so they pump the posts.
They pump the posts. You know, if he says something positive, the market goes up.
Yeah,
like it's
negative, down.
It goes down.
Buy when it's down, sell when it's up.
You know, and man, I learned this the hard way because I started trading a long time ago in 2008. Man, I was, you know, the retail guy jumping in, you know, going all in on things, and I realized, fuck, I was losing. You know, I was supposed to be losing on this mine, finding this iron ore or whatever it was, and making a ton of money because I was exit liquidity.
Yeah,
that's what I was.
Yeah, that's exactly what you are.
You know?
Yeah, if you don't understand how it works, you are exit liquidity. If you understand that concept, you can flip the script.
Flip the script.
Yeah, and be the other person.
Yeah, and that's what's happening now, I think, as well, in the whole economy. You know, at the moment, things are too expensive. There's too much debt. Rates are going up. Things are slowing down. You know, all over the place. You know, you can just look in Victoria, especially. The Victorian government there just changed.
We should do. You know what we should do? We should actually go to auction weekends through Sydney and bring it to the podcast next week.
We should have a look.
Yeah, 100%.
Yeah, just have a look, see how many people are coming, how many people are bidding.
Yeah.
You know? Because I was in shock last week from what I saw.
Oh man, that's unbelievable.
It was unbelievable.
When was the last time you saw that?
I haven't seen that, honestly, like probably 2015.
Yeah, wow.
Like, that's the last time I saw it.
Yeah.
You know, going to houses and not seeing anybody there. You know, and I'm not saying, you know, I was buying $2 million houses. I was buying the houses that normal median houses.
Yeah, right? But that's the everyday person, right? Yeah.
And they're not rocking up. If they're not rocking up, those houses are not getting sold.
It's a big market. It's a big market. It's the biggest market. Yeah. Crazy stuff.
Crazy stuff.
Crazy stuff. But yeah, I reckon let's do it. We'll lock in a date. We'll lock in a real estate date.
Just have a look.
Yeah, have a look and then we'll bring back the info.
Yeah.
All right, man.
All right. Till next week.